Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down both from an order flow and technical perspective. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move. And in doing this analysis, I will provide as much free education as possible. So I really suggest that you stick to the video to the end. So without further ado, let's go straight to the charts. In today's video, I want to speak about USDCHF because we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can notice is that the market has just created a very strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just retraced exactly to the zone which is in between the 0.618 golden ratio and the 0.786 of the Fibonacci taken on this monthly impulse, which is a very strong level of previous monthly resistance, which is now turned support, which we did in fact expect the market to test and then to start to reject to the upside. So here in the monthly, everything seems pretty bullish and we could expect more potential bullish price action to develop from here. Dropping down on the weekly time frame, what do we have? Now here on the weekly, what we can notice is that we have a market which here at the left was creating this very strong weekly demand and support area. The market rejected it multiple times, however, then it broke below the area with this red candle. Now, after the break below previous support, that previous support is supposed to be turned resistance. However, if the market creates a close back above the zone, at that point, this classifies as a fake breakout, after which you expect a retest of the level at which the market created a fake breakout before then printing a rejection higher, which is in fact exactly what the market did. And if you remember, I did make a full breakdown of USDCHF when the market was around this area, explaining all the reasons for which we expected this rejection higher. Now, if you're asking yourself why the market creates these fake breakouts, that is because these are needed from an institutional perspective in order to place all their orders. Because keep in mind that for retail traders, we can just click the button and our order goes through. But if you have a massive order to place, there isn't enough liquidity at every specific time in the market in order to fill your order. Because for every buyer in the market needs to be a seller, for every seller there needs to be a buyer. So if you are actually buying and there aren't enough sellers in the market and you're an institution with a massive order, what you need to do is create sellers in order for you to actually fill in your order. And that is where fake breakouts come into play, because when you have a fake breakout, you have the stop loss hunting of all stop losses that are below that support. At that point, all those stop losses trigger sell orders, because if you are buying, your stop loss is simply a sell order. Therefore, by hunting their stop losses, you're actually creating sellers, which then you can buy from, therefore filling in your order, your massive order if you're an institution. And that is when the real move to the upside can actually start. That is why fake breakouts are created. Now, if we drop that on the daily time frame, what do we see? Now, here on the daily time frame, first of all, I spoke about USDCHF a few times in the past. I spoke about it when we were around this area. I made a full breakdown explaining all the reasons for which we could expect this rejection higher. Then we had the impulse, after which I made a full breakdown explaining why we could expect first a correction and then the continuation higher, which is what the market is currently showing. And by the way, I will link in description these previous analysis so you can go and check them out for more free education. However, at the moment, what we're noticing is that in creating this move to the upside, the market is also starting to create a W formation. And in general, after the creation of a W, what you would expect is for the market to create a move to the downside, to go and complete the pattern at the previous resistance turn support. So if the market from here actually creates a rejection higher, at that point, we would basically have the creation of this W, from which we could then expect a move back down and completion of the pattern at the neckline, which in this case would be this previous resistance turned support. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the CHF, what we can notice is that with the last reports, net positions have been decreasing. We went from having minus 2.2k to now having minus 6k net positions, with 1.2k shorts added with the last report. However, it's important to point out that we are already starting to see longs getting added. So we're having in the long term net positions decreasing, but in the short term, longs already getting added on the CHF. So what this means is that in the long term, we have CHF weakness, which is exactly what we need for this rejection higher. But in the short term, we're seeing longs added on the CHF, therefore showing CHF strength. And CHF strength is exactly what we need in order for USDCHF to create a rejection to the downside and complete the W formation at the neckline. So this COT data seems to be in sync with what we're seeing here already from a technical perspective. So if the market will actually create this W, how we could be approaching this potential rejection lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to a bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection lower for the market to complete the W formation at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you will have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, you will see that at the moment I'm running a special promotion in which you have the possibility to join the mentorship program with a discount. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you have the possibility to get a full refund credited back into your trading account. And if you scroll lower, you will see that from here you have the possibility to join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. And I will see you in my next video.